Ed Moore is my name, or Edward, but I prefer to be called Ed. Edward's when I'm in trouble. But Ed is my name. I'm based in Dublin, and I'm the CRO here at Payrails. I've been here for just under a year. In the context of like Payrails, what is Payrails? Payrails is a payment infrastructure layer that was built for enterprises. And so the core attribute or the core component of what Payrails builds is an infrastructure layer that's modular, and ultimately that gives enterprises back the element of control. What I mean by that is large enterprises typically tend to build large infrastructure, particularly in payments. And the commonality of a lot of modern payments companies is you have to divest a large component of that infrastructure. And with Payrails, we allow you to have a selection in the context of what modules you use and what infrastructure you use to continue to realize the current investments of that infrastructure investment you've made, and to scale and soar while using a modular enterprise platform such as ourselves. So we're really like an organization layer, if you want to call it that, for all the different components of payments across the journey.
As like a business model for Payrails, it seems like, you know, once you hit that and once you kind of get to that stage that you were talking about, like we want to be the kind of one payment structure so everyone can kind of, you know, use you guys, I guess. Like that's very different to a lot of businesses where, you know, the goal isn't always, you know, that kind of clear, if that makes sense. Is it genuinely just like we are, you know, we're trying to find a way to get to that goal, and once we've hit that, we've kind of won in a sense? Does that make sense?
Yeah, look, well, I don't think in the world of software and fintech, I don't think you've ever won, but
yeah,
there'll always be somebody great coming behind you. But I think the major premise, though, is the way we think about it is different. We want to empower the merchant, the business to have control, and then it's up to us to deliver the value to be a part of that infrastructure, right? So if we're not delivering the value or the best-in-class performance or the best support to enable them to do that, then they will replace us with a best-of-breed singular solution in that context. And so ultimately, I think we would love to be the one of everything, as every company would be. But the reality is that's not a realistic expectation today. In the future, as we evolve and hopefully we become like, you know, a Stripe or a Revolut, where you start doing multiple adjacent innovations, sure. But I think right now, as an organization layer for the payments journey, that's ultimately the journey that we're aiming for. And so it's how do we build a system and all of the innovations on top of that to, again, empower the merchant to control cost, control their infrastructure, control the customer experience. And so we need to ensure that we're enabling the merchant to have that control rather than us, which is the typical SaaS model. Will enable you to do what you need to do, but ultimately we control it. You have to do it with us. If you go outside of that, then you need to build everything yourselves. We want to be the bridge and say, hey, you can use the best in breed with us, but we'll stitch all the fabric together for you.
This sort of like Frankenstein stack, something was coming up like a lot. So solving like the Frankenstein sort of ledger. And it's like Payrails often talks about like killing the Frankenstein payment stack. I'd love to hear more about that. If it's something from you, it's essentially, the Frankenstein problem is no longer just about like pipes like the PSPs, but it's actually about the reconciliation. And then the broader question, like, is the CFO now a bigger stakeholder in your sales process than the CTO? Like the Frankenstein, the Frankenstein problem, I think it's being called.
Yeah, well, so if you look at traditional enterprises who aren't payment companies or aren't specialists in that domain like we are, then architecturally you would define us as they're building a Frankenstein smorgasbord of APIs stitched together. So yeah, I don't think we've called it a Frankenstein, but I think you could argue that it is a Frankenstein. They're putting all these different components together. And by doing that, you know, the data, the logic, all of the premises that you want on your business, you have to try and stitch that logic across multiple providers, which means it sort of becomes like a Frankenstein. You're borrowing bits and pieces from everybody, right? Yeah. And so what we ultimately are trying to define is saying, hey, you can continue with that Frankenstein, but we can complement that with a best-in-class payments infrastructure platform where you can use other components of our platform, or you can replace a large component of that stack to allow us to streamline those operations. And so as you were saying, there's like two parts to it. There's the technical aspect of simplicity of integration and management and how it works with core applications within the customer. But then the other part of it as well for the office of the CFO, one of the major issues I've run into in all my times in payments, you may sell a deal, but the office of the CFO says, hey, how do we reconcile it? How do we report on it? How do we make sure our order data and our transactional data is aligned? And so because we're agnostic by design, we effectively solve a lot of those problems because we obviously have modules around reconciliation. We have modules around unified reporting around performance and fee monitoring. So even if you're using multiple providers, we can be the fabric that stitches all that together for the office of the CFO, while also for the technical teams, we can have a single integration layer, if you want to call it that. So they don't have to work with all of these individual parts. We can be the layer that actually has all those for them, and they can switch it on by design.
Enterprise companies in Ireland and more broadly across Europe are increasingly demanding flexibility, control, and performance from their payment stack. That was a quote from you, and it's more telling. I think that was in November, maybe. And I guess it's more telling of like not only in payments, but of the broader technology industry as well. People are looking for more flexibility instead of like single-use tools generally. Is that kind of what you're referring to? Is this flexibility, this control, this?
Yeah, like so there's core systems that businesses will use that they can't live without. And then there are systems that they like, but they would like more flexibility in that to, if you use the payments world, hey, I love working with provider X, but in this country, I want to use provider Y, and here I want to use provider Z. Stitching that together ultimately becomes they need to do it themselves, or they work with a company like us who will basically stitch that fabric and solve all the problems beneath that. And so that's generalistically the problem in payments today, because the biggest issue is fragmentation. Fragmentation just exists across the board. Ultimately, what merchants want is control about who they work with, but they want a organization layer, if you want to call it that, or an infrastructure layer that they can complement with their existing technology stack or replace. So ultimately, then they have the control commercially, experience-wise, technology-wise. They make the decision about what they continue to use and what they don't use. And inherently, for most SaaS companies, that's sort of the polar opposite to what they want. For us, we want to enable that. That's the opportunity we're pursuing, to empower the merchant to make that control, to make that decision about who they want to work with and how and why.
What are the areas with Payrails, like how is AI? Because you so early at Stripe, you've gone through the whole trajectory there, and maybe sort of like maybe when AI might not have been as involved with what they were doing, I'm sure it's sort of rampant now within all of their systems. But how has that changed from your perspective? Right, you're probably well poised to maybe discuss something in terms of like how has AI specifically changed the payment space? Because it must have changed a bunch from your time at Stripe, right?
Yeah, look, I think the most logical, AI is sort of reframed machine learning. Working at Microsoft, machine learning's been around for quite a long time. And so there are a lot of ML models, primarily in fraud. And so they exist. Yeah. But I think you're starting to see the infusion, I would say, of AI within the category in the context of fintech. And so I would say it's infused rather than becoming the product. I think for us, it's a little bit different in that because we're trying to empower the merchant and give the merchant control, intelligence is core of that, right? And so building an intelligence layer that can inform them on the attributes of their payment stack about what works well, what doesn't, what they should change. Because if you take payments in general, outside of the payments community, it's quite, it's a domain that's not well understood. And so how do you empower the generalist or the CIO to be empowered, or the CFO to be empowered to make the right effective decisions? Because payments is really at the intersection of profitability, because it covers its own revenue, its cost, and its operations. It's quite all encompassing. And so we want merchants to be proactive when it comes to payments. It is a strategic lever in driving growth from consumer experience, accelerating conversion at checkout, while also optimizing performance and cost and all of those vectors. That's where AI has a strong place to play, right? And so we're shaping them in the context of our current infrastructure and our data to inform our merchants, saying, hey, you can optimize performance by doing X, or hey, we can reduce cost by Y. Do you want us to do that? And so there's this inference that AI will do it all for you. I don't think there's any business in the world today that will allow an AI to make multi-billion-dollar decisions in changing the flow of their payments. Not today anyway, maybe 5 to 10 years from now. But the core is like you're giving the intelligence and the information and the context to make that decision. That's the hard part, right?
Yeah.
And then giving the faith that this is the right thing to do. So the other aspect that we're focusing on is the ability to have experimentation without fear of ruining production, right? So you do need to be able to experiment and iterate. And so if we can build an intelligence layer that delivers that, then allow the ability to experiment and test and iterate, and then the ability to roll that out and track and govern, that's for us is where we see AI as a really interesting layer.
Digital wallets is, I guess, is now like the kind of thing, you know, we've moved from like cash to then cards, digital wallet stuff. Like, is there anything like on chain? You know, we have a few like kind of stable coin companies coming on the show. I wanted to know whether Payrails is ever like, that's ever part of the kind of roadmap for Payrails or not at all.
Yeah, look, it's on the roadmap. It's something we're continuously assessing with our customers. Obviously, there's some really interesting use cases around money movement and the instant settlement of those funds. And then also a lot of remittance companies are looking at that from an erosion of FX, if you want to call that, from a cost perspective. Obviously, that potentially over time, as that global acceptance of that grows, we may start using that in terms of global treasury. And so the movement of money and the settlement of money and how you do that. So 100%, we're looking at that with our merchants. It is on our roadmap. And so it's something we're acutely looking at because there's a lot of noise about it. What we're really looking for is the application of use cases that enterprise customers want to adopt. And so there's a lot of curiosity and digging into that. And so we're just looking out for what are the core use cases that have broad application that will benefit our merchants.
Yeah, because it's interesting because we keep having the conversation where, you know, as you mentioned, like there's a lot of noise like going on, and as there's now starting to be more application in 2026, there's been predictions where this year is the application is going to start to kind of really feed through. As someone who is like kind of very high up in the company that, you know, can kind of go and capitalize on something like that, how do you think about it in a sense that are you kind of just waiting for customers to kind of come to you with a problem that you guys might not have originally solved, or you know, within this kind of like moving on chain stable coins, or are you going to try and kind of, I guess, be more proactive about it? How does it kind of work, or how are you like thinking about that?
Yeah, look, so I think for us, ultimately, you know, I've probably said it about 5 times, is like how we work. We build a lot of product through product ideation, but ultimately working with merchants, understanding use cases and problems we're trying to solve for. You know, like the primary output you see today is really about instant settlement and cheaper transmission of money effectively. So of course we're speaking to customers about that. We need to find use cases with them that they're keen on to delve into and solve those problems. And so ultimately, like that's the continuous conversation. It's almost the same vein as agentic commerce, right? Again, that's a topic we're acutely looking at. But again, you know, one of the questions we get a lot is, you know, on agentic commerce is what's the consumer adoption of agentic commerce? And so I think with all of, you know, ACP and UCP being launched, and I think Microsoft just launched with Stripe recently and Copilot, all of those surfaces are being transmitted into a checkout effectively. But like the core question is, are we going to see consumers adoption into those cases? And so they're the questions our customers are looking out for. So they're biding their time to see, hey, when does that happen? But of course, we and they need to be ready. And so again, that's why we're sort of delving into those topics. But ultimately, we need to find the use cases that will then transmit into value for our customers to say, hey, we want to do this. And so they're very active topics, to be super transparent. But of course, as every company is. But like, I think once we get to a point where we can find very strong use cases that drive demonstrable value, that again, give the control and access to the merchant, then those are when we'll start launching and going big with those products.
I saw that Payrails had opened a hub in Ireland. I think it was in November, just gone previous year, November. I'd love to ask you, you know, what like why specifically in Ireland, and what is the ecosystem like there at the moment? Like, why was that a sort of a go-to choice for you guys?
Yeah. Well, I am Irish, so I do know the market quite well. But like, I think the major reason why, in all transparency, is, and you hear this a lot, is access to talent. And so effectively what's been built in Dublin is you see every major tech company in the world. The startup scene is starting to accelerate there, which is fantastic. There's a lot of innovation happening in the market. But I think more generalistically, when we're looking to build out a brilliant company, you need brilliant talents. And so we're in Berlin and another of other markets, and we have amazing talent there. But the talent pool is very, very broad in Dublin. And so realistically, the major reason was talent access. And so because if you understand the nature of Dublin, everything's within a 4-mile radius. And so getting staff, if you get people, everyone proximity-wise within a very, very small pool, which makes it very, very attractive because you can get great talent, and networking-wise makes it very easy to attract those people. Because once you start getting a hype, you pretty much hear it around the city that people start knocking on your doors, they become keen, right? And so a lot of recent tech companies have come there, and all the AI companies are, and so you see everyone sort of circulating around those types of companies. For ourselves, we want to be part of that. And because we are a high growth fintech, there's a lot of those other similar companies in that market. So there's a lot of learnings and potentially partnerships and optionality we can get from there.
Previously, Payrails has described itself as the operating system for profitable growth. I would love to know sort of how is this, what are you guys looking forward to in 2026? What does this mean? Is this, I'm assuming this is like a large part of what you guys are doing for the next coming year.
Yeah, look, a core element of our prioritization is really, again, around that leverage and control. So, we want to help teams make decisions faster without effectively having to rebuild their technology stack. And so we want to move to a world where they can actively optimize payments and get the right output out of that, be that cost or performance or customer experience. If we really think about like innovations we're looking at building on, it's really continuing to do that joint build with customers, but also start building out an intelligence layer that sits across our infrastructure. And so I'm sure you've had lots of AI companies through this forum. And so, you can't ignore that. But like I would say, I would really call it an intelligence layer that sits on top of our infrastructure that, again, empowers our customers to be informed, to have clarity. And once they have those two elements, that gives them the control and the ability to make the right decisions for their business, be that optimizing different things around growth expansion into new markets, or optimizing their cost base, or optimizing their authorization performance or fraud performance. Our core is giving the intelligence to their merchants to allow them to do that, while on the same vein, solving all the complexity that exists in the context of, understanding those elements between either reconciliation or things like understanding their fees and their costs that they're paying across the multitude of providers.
When a prospect comes to you guys, is it we'll tell us what you want and we'll help you build the almost like the infrastructure behind it, and it's like every customer is different, or is it kind of not one size fits all, but do you know what I mean? Is it you're building specifically for that customer and their like specific needs?
Yeah, no. So if we had to be bespoke, we wouldn't really be a software company. We would be a service integrator in that sense. But of course, customers do inform our roadmap a lot, right? So we work a lot with our existing customers and our prospects. They do help inform us about what's value for them. And so it is a little bit of both, to be fair. But like primarily, we have a roadmap. We have a clarity of what we're building and where we're going. Obviously, we validate that with customers. And then when customers come on with feature requests that they want, and they're keen to use it, if it makes sense for us to do it, of course, we will build those. But have we built every single setup that we need globally? No, of course not. We're still scaling. And so, the customer is the best source of feedback and inspiration for us. So we're constantly validating and verifying everything that we do with customers.
You spent 15 years at Microsoft. You were also at Stripe on the board as well. And then you spent your whole background sort of building the current monoliths that we have available today. Stripe being one of the most valuable private companies in the world, Microsoft being a household name and one of the most valuable companies in the world generally. What was it in Payrails that made you think like, I gotta go, right? Most people are probably happy where they are, but to make the jump, and there must have been something special in Payrails, and we'd love to hear about it.
Yeah, of course. As you said, I've spent 15 years in Microsoft, started in Australia, worked across Europe, spent a lot of time innovating within Microsoft, launching Office 365. So I launched that across Western Europe, and we built a lot of modern automated billing and provisioning systems, which are today very common, but back in 2009, that was quite innovative. And then obviously after 15 years, I wanted to change and made the leap to Stripe, and Stripe was amazing. So you guys know Stripe. Stripe is one of the leading fintechs in the world, one of the biggest private valued companies in the world, and they are soaring. And so I think when you look at Stripe and look at Microsoft, there's two common themes to it. They are very, very strong technology platforms, but also by design, they are a very streamlined platform, which means as long as you do everything on that platform, it's amazing. But in payments, the payments is fragmented. Once you go outside of the 48 core markets where Stripe is at, then you have to start integrating with lots of other providers in multiple different jurisdictions and different countries. And that's where the infrastructure layer gets really, really complicated, because then you basically need to build your own in-house organization layer or infrastructure to manage this spaghetti junction of multiple players, be it PSPs or payout providers, et cetera, et cetera. And so during my time, you can see that theme of once they want to start going to new countries or new vectors where Stripe didn't exist, not that the wheels fell off the bus, so to speak, but you could not meet the full requirements of what those customers wanted. And when you go to true enterprises, all enterprises want control. They want control commercially, but they also want control of the technical stack, and they want control of the customer experience. And at times, we couldn't deliver that. So that was one thing. And then the other part was obviously through my network, I got to know Orkon and Emery really well. They basically ran Delivery Hero, built this massive team across 70 countries, and they effectively led the experience that we're now trying to solve for, where they worked with multiple payment providers. And they basically had to build a team of 300 people to manage the complexity of working across 70 regions, because there was no one payment provider that could solve that for them. And so they had to build that entire architecture to make that actually work. And so that's what drew I suppose, the inspiration for them to found Payrails. And obviously, when I got to meet with them and understand the vision of where they wanted to go, ultimately they're building an infrastructure layer or a platform that is agnostic, and it effectively organizes all of this fragmentation into a single layer. And so what's appealing about it is nobody's done it yet. Nobody's been successful. There's a number of other companies trying, but nobody has gotten to that level where they can democratize access to global financial services in every jurisdiction in the world and do all of the different business models that sit beneath that. And the vision the team have here is to get to that output where we can enable businesses of all sizes to transact globally and focus on doing what they're great, while we'll be the infrastructure layer that they can choose different modules to implement that suit them based on their technology stack and on their strategy of where they want to go. So that was the main reason why I ended up here.